Business Editor Ross Greenwood joins me live now. Ross, a rate rise coming. Just how big it will be is the question we'll have answered within the minute.
We will indeed, and we'll sort of bring that to you as it comes by, just standing by for that number to drop. Just listening to Warren Hogan there, one of the interesting points to observe right now as we come to this decision is while Australia's cash rate sits at 0.35% with only one interest rate rise, of course in the UK that cash rate is already at 1%. In New Zealand right now sitting at 2%, and in the United States sitting between 0.75% and 1%. So in many people's eyes, Australia, which is seeing inflation coming down the road via what's taking place with energy prices and also what's taking place with consumer prices right now, is probably seen to be behind the curve. And so that's the reason why, even though markets say they won't go too hard too quickly, the fact of the matter is they are still needing to go to try and quell the inflation. It's just come down now, and indeed it is higher than expected. So they have raised rates by 0.5% today to 0.85%. So this is more than the markets anticipated. So just to repeat, the Reserve Bank has today increased interest rates by 0.5% to 0.85%, which is more than what the markets have anticipated, and it shows a genuine intent from the Reserve Bank to try and get on top of inflation, but acknowledging also that there are significant inflationary pressures there that they were not acknowledging 12 months ago.
Yeah, that is above market expectations, and I guess it goes to that point about driving behaviour. If you want to help rein in the inflationary pressures, and you just sit within those expected areas, it wouldn't have as big an impact as maybe shocking the market a little like this. Is that a fair way to put it, Ross?
100%. That is precisely what they're trying to do. Change behaviour, try to make certain that people understand that they are prepared to try and change, if you like, the spending and the behaviour. But mind you, of course, what it does is it means that banks are going to instantly pass on this 0.5% to those people with mortgages and to businesses as well, which means their costs are going to rise on top of this. So this is in many ways adding to the cost pressures there. Just to go to the statement by Philip Lowe, the Governor of the Reserve Bank today, he said that inflation in Australia has significantly increased. He says while inflation is lower than in many other parts of the advanced economies, it's higher than what was earlier expected. So we can now see here what's taken place, that these interest rates have come off their lows. You can see probably where these median expectations of interest rates are for the Reserve Bank, somewhere back above 1.25%, 1.5%, which is what people have got to anticipate by the end of this year. So effectively what they're saying is today's increase in interest rates is a further step in the withdrawal of extraordinary monetary support that was put in place to help Australia's economy during the pandemic. And however, what they're saying is the current inflation pressures in the economy and the very low level of interest rates, they're moved by 50 basis points today. So just looking at this here, the impact on a family, the immediate impact as a result of this rate rise will be $265 a month for a $1 million mortgage. For a $500,000 loan, half that, $133. So on top of all of the other increasing costs that those families are bearing right now, including the increasing price of energy, there is going to be more of an impost on them in the price of their mortgage. So as I say, this is going to certainly potentially quell people's habits or get them to dip into their savings. And in many ways, this is designed to try and, if you like, overcome the inflation very quickly.